In this lesson, I want to introduce you to the types of Forex orders. There are three orders you can take to enter a position. The first is a market order. When you either buy or sell using a market order, it means you are buying and selling at market price. The order will happen instantly at whatever the market price is. This order can be relevant to your trading strategy, but there are two more order types that you should be aware of. First, let's cover the buy-sell stop order. I find the easiest way to remember this order is with an analogy. So let's say you are waiting for a bus and you are at the bus stop. The bus drives and stops, picks you up and drives on. And it drives on in the direction it was initially going. In Forex, a buy-stop order is like being picked up at a bus stop. So let's convert this analogy to price. For a buy-stop order, the price starts lower than your ideal entry price, but you anticipate that it will increase. So you place your order above the current price. If the price rises, then your buy order will be executed and then hopefully the price will continue to rise. A sell stop order follows the same principle except you want to enter a short position. So you want to sell and you want to enter it below the current market price. Whether it's a buy stop or a sell stop order, these are pending orders. So they only get executed once the price reaches your level. Next, we have something known as a buy limit order and a sell limit order. In a buy limit order, you anticipate that the price will go up, but first it will make a pullback. Or you look at the chart patterns and currently the price is too high for you to enter. So what you do is you want the price to come down, and if it reaches your level, then it will trigger a trade and then you will enter. So when you create a limit order, you expect the price to bounce. So it will go down, hit your order and then bounce and continue going up. The same applies to sell limit orders, but the opposite applies. So the price is going down. You think it's going to go down even further, but you expect it to make a pullback, in this case go up, before it takes another drop. So you place a sell limit order above the current market price. If the price goes up a little, it will execute your order, you will enter it, and then hopefully you expect the price to go down. Here's how the order types look in a real trading environment. And by real trading environment, I mean a simulated trading environment. So as you can see here, we have a chart. It's the Australian dollar, Japanese yen, and I can click play, see how the chart performs, and then pause it anytime I want, or if I want, I can just skip it ahead one bar at a time. So here we have a chart. This pink line here, it's a slow moving average. I believe it's a 200 period moving average. And this is a technical indicator. I'll introduce you to these indicators in future sessions. And the red line, it's a 15 period moving average. For now, this is not important. What I want to show you is the order types. So we have a chart pattern that seems to be going down and it may actually bounce from this moving average. So what I want to do is I want to buy it at this moment, buy it at market value. So I would just click on buy. And what happens? This green line, it represents my buy order. So instantly I will enter this position and I will hold this currency. So let's play and see where the price goes. So after the initial drop, the price actually went in the good direction. So what I'm going to do is I'm going to terminate this position with a small profit. Okay, I have just closed it, and as you can see, we bought it here, closed it here. In a live trading environment, you will not see this. This is part of the plugin that I'm using so that I can play around with past data and see and test different strategies. So this was a market order. Now let's just play it a little bit. Okay, we can see that the price has started to go down. So I want to place a sell order at market price. And again, we see this line here, so it represents my sell order. Let's see what happens to the price. Okay, it went completely against me. So let me just close it. And that was a sell order. Here we see that it didn't go in our way, so we would have lost money. Let me just actually skip it ahead a little bit to see something a little bit different. Okay, we have a chart pattern here and it seems to be trading up. So now I'm going to do a buy limit order. So what I mean by buy limit is I expect the price to go up and I want to buy, but I don't want to buy at this level. I want to buy at a lower level, something here, for example. And this level, it's actually 17 pips away from the current market price. So I will click on here on pending order and I will select the number of pips away from the current market price at 17 and I will click on buy limit. So as you can see here, it has created a pending order below the current market price. So this is a buy limit order. Now let's see if this works at all. Okay, it has entered below. And if we look at trades, we have currently one open position. And here's the profit and loss of this trade. This is a simulation, but it would be nice if it went up a little bit. Perfect. Okay, I'll pause it right there. We see this current profit here. This was a great example of a buy limit order. Price was here, we wanted to enter it here, we set up the order here. When the price fell, it triggers this pending order, entered our position, and then the price went up. So let's close this position at a profit. So this was a buy limit order. Now I'm going to show you a sell limit order. So for example, a sell limit order occurs when obviously we want to sell, but we want to sell at a better price. So current price is here, but we want to sell it at, let's say, this level. So let's say we want to enter a sell order at 14 pips away. So I'll set up the distance at 14 pips and I'll create a sell limit order. So it's a pending order. If the price touches this point, it will sell. Let's see what happens. Okay, this time didn't work, the price just fell down. However, I still want to use this example and show you what a sell limit order looks like. So I'm going to modify the current order and I'm going to set it up here. So the price is here. If it reaches this area here, it will trigger my sell order. So currently you can see here we have a sell limit order in place. Let's see what happens. Okay, the order, it changed. So when it reached my level, it triggers the order and now we are in a sell position. So we are in a short position. Okay, little problem here. We entered the sell position and then the price went up. Doesn't matter, but the whole purpose of this exercise is to show you what the trades look like. I'll just move the price along a little bit. Here's another example. Price is going up and let's say this time I want to enter a buy stop order. So a buy stop order is I am entering the order above the current price. I will set up my buy stop order here, which is 12 pips away, buy stop. And what I'm anticipating that will happen is that the price will go up. I will enter it here and there will be another, say, massive breakout and the price will go up again. Let's see if this works out. This buy stop order, if you rewind the video a little bit, this was a buy stop order. It hit this area, it entered my trade, and now I am in a buy position. I'll pause it here, and this is a great example. So I anticipated a little bit of a breakout at this level, and what happened was it triggered this order, there was a bit of a pullback, and then the price went up again, so I would be in profit. That was an example of a buy stop order and this one would have been profitable. And now, although there is a strong uptrend in this chart pattern, what I want to show you is an example of a sell stop order. Let's assume that I think the price is going to go down, but only if it breaks through, say, this zone here. So I'm going to set up a sell stop order 26 pips away from the current price. I think there's a bit of price action going on here. Perhaps this is some sort of support. If it gets broken, then the price will go down. So 26 pips away, I'm going to click on sell stop, and here's my pending order, my sell stop order, and here you can also see the type is sell stop. Now let's play and see how this plays out. There's a massive uptrend going on here. And okay, something has happened here. What I'm going to do, I still think this is a great example. I will just modify this order. So this is the new zone. If the price drops to here, it will trigger my sell order, and then I anticipate the price to go down even further. Finally, it fell, and this sell stop order got triggered. Now I'm in a sell position. How many pips is that? That's 35 pips. Let's say I want to close it. And this one was profitable. So that was the three main types. So what I just showed you in this video was the market order. The order is executed immediately, whether you're buying or selling. Then we have the buy stop or the sell stop order, and the buy limit and the sell limit order. If you found this lesson useful, don't forget to subscribe to my channel. You'll get updated with all my most recent videos. This add-on to MetaTrader 4 that I'm using here, it's Soft4FX Forex Simulator. There is a link in the description below, and I think it's the best way to backtest any type of strategy because it simulates a live trading environment. Thanks for watching, and I'll see you in my next video.